I said, congrats. Is that your first ever gold purchase? Why did you decide to buy gold? And he said, thanks. First time buying gold, inflation. And I don't trust all the printing of money. My dollars continue to feel less and less valuable.
This divergence is letting us know that fundamentally in the precious metals market, something has changed. Hi, and welcome to this video. I've got Alan Hibbard with me once again. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great, great. So you've put together a presentation for us. Let's see it.
Yeah, so basically I was wondering about the Costco gold bars because I had some questions and I was hearing some rumors online about how they're priced and how many people are allowed to buy and whether or not you can sell them back to Costco. So I wanted to confirm the facts, and it just so happens that a good friend of mine reached out to me and said that he bought some bars at Costco. So I talked to him a little bit about his experience, and I want to share that with you guys today, as well as some charts. So the first thing I want to start with is a New York Times article. In case anyone doesn't know, customers are flocking to Costco to buy gold bars. So this is a pretty unusual thing. Costco started selling gold bars last year, and they might be selling up to $200 million worth of the bars each month, according to an analysis that was done by Wells Fargo. So yeah, Mike, just generally speaking, what's your impression of these gold bars at Costco?
Well, it certainly does show that the psychology of the public has changed. If you know, just a few years ago, this would have been a loser proposition for Costco, and it would have been put them sort of on the conspiracy theorist nut side to be carrying gold bars. And now they're carrying them because obviously they feel the public wants them. As far as buying them from Costco, you have to look at how much are you saving buying it from a discounter, and what are the penalties that it comes with? Are they a two-way market? Can they do storage for you? Can they put it in your IRA? All of these other things, services that other precious metals dealers such as ourselves can.
Mm-hmm. Yeah, well, you definitely touched on some things they're worth elaborating on. So let's get on with it. So really, one of the things I wanted to talk about was the nature of the buyer, like who's actually buying. Because to your point, a few years ago, that whole conspiracy theorist thing, it would have said the only people buying gold are old people who are doomsday preppers. But that's not the case. Young people are buying it, and very rational people, just everyday people are buying it. So here's an article here from the Wall Street Journal. Who are the Costco shoppers putting these $2,000 gold bars in their carts? Normally, when we think of Costco, we don't think of spending $2,000, but in this case, we are. So just one example from this article, Craig Beauregard and Julia Edwards were at Costco shopping for groceries in December when they spotted a deal that was too good to pass up, a 1-ounce bar of gold. Beauregard, 33 years old, checked his phone and saw the bar's retail price of about $2,000 was $3 below its on-the-spot price in financial markets. So they actually could buy a gold bar at Costco at a very, very, very slight discount to the spot price. So they threw it in their shopping cart next to a 7-pound bag of frozen chicken and a carton of Kirkland eggs. Okay, fine. Americans can't get enough gold. So there's a Gallup poll here. Consumers rated gold as a better investment than stocks and mutual funds in 2023 for the first time in a decade, according to a Gallup poll. So I also wanted to pull out that Gallup poll in just a second. But for first, one other example from the article. Same article, millennial gold bugs. Compared with older generations, millennials have a more optimistic outlook on the benefits of gold, as well as the ease of buying and selling it, according to certain research. This I found very strange. The average millennial allocates 17% of their investments to gold, including ETFs, while Gen X and baby boomers invest 10% of their portfolio in the metal. So these numbers were very surprising to me. I didn't have a chance to confirm them. But Mike, when you hear these numbers, do they sound reasonable to you?
No, it sounds like it sounds like the article is very misinformed.
Yeah, that's what I thought too. I mean, they're including ETFs, but even then, I mean, 17%. That's I don't know a single
average millennial, and are they that 10% sounds like a 10% allocation, which is what has been recommended by like Wall Street for ages. You know, they weren't recommending any when it was 250. There was no Wall Street firm recommending gold or anything. When people ask about gold now, it's back to that thing of 10%, which has been an average. So don't put the best performing asset of this century in your portfolio. Limit it to 10%. But the number of people that own gold is less than 1% of investors still, isn't it? I mean, it's so to say 17% is that the average millennial allocates 17. The average millennial that makes the choice to go into gold as a percentage of their portfolio might be putting in 17% after they make that decision, but that's 1 out of 20.
Yeah. And even then, even if that is the statistic, I still would be kind of surprised.
Yes.
So I'm not sure I'm a millennial. I know very many millennials. I'm not sure of a single one that has 17% allocated to gold. And most of the millennials I know don't own any. So yeah, this is misleading. This is probably, somebody who wrote this didn't, they probably weren't an expert in the industry. They're probably just good at writing articles.
Yeah. Of my liquid assets, I would imagine that gold is 10% or less, but silver is more than 50%. So
that's right.
It's silver is the majority of my my liquid wealth. I've got some real estate now, obviously, but when it comes to something that is liquid, gold is a percentage, and silver is the vast majority.
Yeah, definitely playing that gold silver ratio. Well,
Exactly.
anyways, just the last point I wanted to make here is that young people are buying gold, millennials included. This Florida resident said it was a hedge against economic collapse. So that's why he's buying it. And he said, I want something physical that I can hold. I'm protecting against a situation where there is hyperinflation. So this is part of the mindset that young investors are having. I can totally relate to it. And I do want to get to that Gallup poll in just a second, but first I actually wanted to pull up the Costco website and show you what these bars look like for anyone who hasn't checked it out. So I am not logged in because I don't have a Costco membership. So you would have to sign in if you want to see the price, but the price isn't here for non-members. But the features are here. 24 karat gold. It's non-refundable. So once you buy it, you're stuck with it. Item is not eligible for price adjustments. So I'm thinking what that means is if you buy something and then it goes on sale the next day, or if the price changes, sometimes you might be able to say, can I get it at the lower price? Or perhaps price adjustments means if you find the same product offered at a different vendor, maybe they would match the price. So it's not eligible for any of that. And limit of 1 transaction per membership, with a maximum of 5 units or 5 ounces of gold in this case per membership. So that's interesting. Only 1 single transaction.
Huh.
So,
wow.
So anyways, I asked my friend a little bit about this in a minute. Anyways, sorry, did I cut you off, Mike?
No, I'm just amazed at that 1 transaction per membership. What are they trying to prevent there? A sudden rush of gold and causing rush into gold, causing a spike? Are they trying to prevent Costco from creating a price spike in the physical market?
I don't know, but I could imagine some pretty wealthy people who would have a Costco membership that could go in buying a lot of ounces of gold if they wanted to.
Yeah, which, if you're going to buy a lot, I store the vast majority of, I only keep a couple of trinkets available for me to lay my hands on. Most of it is in storage where it's insured and it's highly liquid. It's insured. It's protected by guys with guns, and it's highly liquid in a two-way market. I can lock in a price within just a few minutes right now, and then have the currency back into my bank account within a few days. It's as liquid as the stock or more sometimes. And with this, you've got to take it home. And if you're buying, you know, many, many thousands of dollars worth, do you really want to be doing that? I don't know if that's a good idea. You can't put it in your IRA. So I like the storage accounts. And then, you know, we can't see the price, but how much are you saving? It was $3 below spot. So if spot is 2,000, isn't that 0.15%? $3 below 2,000.
Yeah, it's 15 basis points.
0.15. So you're talking about nothing. You know, if you're trading away a level of service and stuff to save these pennies. I mean, we don't sell at spot. Everybody has to make a little tiny spread on this, including Costco. I don't know how they're selling below spot, but they were at that moment. This changes constantly, every minute.
Exactly. And that's something I was going to get to in just a second. So that was someone who bought back in December. And my friend who bought earlier this month in April had a slightly different experience, which I want to share in just a second.
Okay.
So yeah, so this is the actual bar, but it has pretty good reviews for what what that counts for. But yeah, if anyone wants to
put your cursor over the stars again. Okay, so then there's some people that gave it 4-star and 3-star reviews. 41 people gave it gave a gold bar a 1-star review. Sorry, I just find that pretty amazing that somebody could buy a gold bar and then be somehow they're buying an ounce of gold and they're somehow disappointed in that ounce of gold that it's I don't know. Go ahead.
Here's Thomas gave it a 1-star review. He said, "Good product, bad service." So it's kind of the service here that got a 1-star review. I can't speak to I didn't read all of them, but I did check out this one. So
okay,
maybe it's not the bar, it's the service. So
yeah.
Anywho, let's keep rolling. I want to get to that Gallup poll. And this is actually from May of last year. So gosh, it's basically a year old at this point. However, it highlights an important long-term trend. So Americans have more of a hankering for gold than stocks for the first time in a decade. And from this, we've got, for the first time in a decade, Americans think that gold is a safer bet than stocks for long-term investment, according to the results of a new Gallup poll. In fact, 2022 proved a brutal year for the stock markets, worst since the financial crisis in 2008. Americans' favorable perception of gold nearly doubled. Gold now runs a clear second place in American perceptions of investment options, behind real estate, the perennial leader since 2013. The Gallup poll, run in its present version every April since 2011, asked respondents, so this is the methodology here, to rank real estate, gold, stocks and mutual funds, savings deposits, and bonds. So there's 5 asset classes here. Gold wasn't a part of this menu of choices until 2011 after subprime. And here's what it looks like. So it may be a little bit tough to read, but it goes from 2011. Each data point is a year, all the way until 2023, last year. And up towards the top is real estate, basically being ranked as the number one investment until last year, where it dropped pretty significantly. Gold is in blue. It's funny, its first year in the poll, it was the clear leader as being.
Okay. I got to say something about that, though. See, this only goes back to 2011, and that's when gold peaked. And it peaked after an amazing run up from 250 to basically 1900, I think, was the peak. And so people, after real estate crashes, after the real estate bubble pops and the stock markets crash for the second time in this century, and people have they're sitting on these huge losses potentially if they got in near the top of these bubbles, and they look at gold, which has gone from 250 to close to 2,000. And so that's the reason it starts out high. But the uptick that you're seeing there is pretty darn dramatic.
Yes,
Yeah.
exactly. And I have probably the same hunch that you have, that if we saw this back, another 10 years prior, or at least before
Yeah.
the 2008, probably we would see gold climbing at some point during that period, and we would see real estate falling, just like what we're seeing now in this last year. So these are part of the cycles that we
Yeah.
experience.
But in 2004, 5, 6, and 7, real estate would have been their favored investment. Like, it would have been huge. And if you went back to the year 2000, it would have been tech stocks. People favor whatever is at the end of its bull market. They look at the past several years, how has it performed, and they just project that out infinitely into the future.
Yes.
I like going with fundamentals. How much currency is there? How much gold is there? What's the gold to real estate ratio? What's the Dow gold ratio?
Exactly. And trade
Yeah.
those big cycles, those big
Yeah.
ratios. So
Yep.
beautiful. So yeah, so we can see sentiment for gold rising. I would be shocked if this is just the end of the rise and all of a sudden people think gold is a bad investment.
Yeah.
That seems impossible to me. So I would expect this to continue. And who knows? Maybe when the survey is done in a month or whenever it runs, we could see gold overtaking real estate. It's quite possible. So let's keep rolling. Here is a friend of mine who reached out and he sent me this picture of these two gold bars. And he said, I am in the golf game. And then he edited it to I am in the gold game.
Right.
So
Auto correction.
yeah, autocorrect. Got him. So yeah, he's in the gold game. I said, congrats. Is that your first ever gold purchase? Why did you decide to buy gold? And he said, thanks. First time buying gold. Inflation. And I don't trust all the printing of money. My dollars continue to feel less and less valuable. So, I mean, if that doesn't just sum up the sentiment, I don't know what does.
Right.
But yeah, this whole problem with inflation, and what is a good inflation hedge? Well, there's theory and there's practice. So I had this chart here from Zero Hedge saying this is not normal, and what we're looking at here is the spot price of gold, and that's the gold line, and then the real rate on the 10-year treasury, that's the blue line. Obviously,
Invert.
these are pretty well correlated most of the time, but the last 2.5 years, there's been a huge divergence. And these two assets are our typical inflation assets, whether it's treasury bonds or it's gold. In theory, they're both hedges against inflation, but in practice, only one of them is. And it could be the case that investors are starting to realize that there is a real difference between these two assets. What do you see when you look at this, Mike?
Well, when you just said a real difference between these two assets, one of them is real. That's the real difference. The other one is just an illusion. But yeah, this is not normal. I'd love to see this chart going back another decade, but this is plenty of data here, and the correlation is astounding until just a couple of years ago, and this divergence is letting us know that fundamentally in the precious metals market something has changed.
Yeah, and in the economy more broadly,
Yeah.
So yeah, I mean, I look at this and I immediately think, okay, a theoretical hedge against inflation, right? That I learned about in school, in finance classes, and then there's the actual thing, that they tried to poo-poo and say that gold has no role in the monetary system. So yeah, this seems like reality coming in. So okay. So next, a continuation. I asked my friend another couple questions.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video.
So next I asked him, any plans to buy more gold? I'm looking at the Costco website and it says limit of 1 transaction per membership with a maximum of 5 units. So if you want to buy more gold from them later, you can't, right? I was just trying to clarify this. And he says, yes, I want to buy more. This is what I could get away with. Well, I try to convince the wife to buy some more. I believe Costco is sold out on this offer now. I just tried on the app and it says no longer available. The limit was, as you stated, not sure if or how it will work in the future with them. I think they're running different versions of gold bars or coins. So yeah, I mean, I guess Costco can change their policy at any point in the future. They could open it up to a second transaction per membership or a larger quantity of units per transaction. Of course, they can sell different bars and coins. So, they can do whatever they want in the future. I believe the maximum used to be 2 units per bar, or I'm sorry, two units or 2 bars per member, and now it's 5. So they increased that limit, but they could increase it again. They could lower it. Basically, anything could happen.
Okay.
So in the spirit of scarcity, how much gold is there, and is Costco going to have more, and can you get it elsewhere? I wanted to highlight this chart that I saw on Twitter. This is gold and gold miners as a percentage of total global assets. So thanks to Tavi Costa here.
Yeah, Tavi's great. The analysis. But the thing is here that, if the millennials are putting 17% for millennials?
They claimed, but again, doesn't seem believable.
It's not believable at all. And all you have to do is look at this chart. And you can see that, it's got to be the currency going into the sector. It has to rise by somewhere between 20 and 30 times just to get back up to what it was back in 1921, 1932, 1948, and 1981. So the way that article portrayed all of these young people rushing into gold and silver was absolutely untrue. The article was the article is highly suspect. I'll put it that way.
I think maybe they meant to say 1.7 instead of 17. Maybe they forgot a decimal point.
Maybe it was 0.17.
It could have been. Could have been. So I know young people are definitely buying gold, but it's just they're not allocating 17%. I'll tell you that much. And even my friend Matt buying 2 gold bars. I mean, I have a general sense of his net worth, and that is not 17% of his portfolio. Not even close.
Okay. Right.
So so something's up with those numbers. But anyways, this is interesting. And to your point, Mike, basically gold and gold miners, right, are both collectively going to have to go up 20 times in price to sort of equal their long run average here compared to other assets.
Well, currency will be coming out of other asset classes, depending on how much they're printing at the time or typing, I should say. When they create new currency, everything can go up. So it can look like stocks and bonds and real estate are going up, but as a percentage, they will be falling as gold is gaining, because gold and gold stocks and silver stocks, they will be rising faster than the other assets. That's what happens like in a hyperinflation. You really can't tell what is gaining value and what's losing value. But even in normal times, like right now, gold is up, about 700% since the year 2000. And stocks are up like around 300%, I believe, that range. And maybe it's a little less than that. We'll go over that in our next video. You can put some of these comparisons up there. But gold is the best performing asset of this century other than cryptos. And so why it's only at 1%, I have no idea, but it isn't going to be there for long.
Yeah, we're just getting started, and some analysts are seeing that as well. Goldman raises their gold price target to $2,700 from $2,300. So this is kind of hilarious to me.
Exactly, because it hit 24.48.80 was the high, and so they've got to be pretty embarrassed. Well, we've got a target of $2,300, but the price is already $2,480.
Yeah, we think it's going down. Yeah, yeah. No, that's ridiculous. So if they keep updating their forecast, then what good are these forecasts? I mean, I don't know. Back when I was a portfolio manager. I worked with Goldman just about every single day. And, you know, I saw their bias. I mean, like anybody has a bias, but like it was very clear. And like it's clear to me that they don't like gold. They, you know, poo-poo it. They say it's a bad investment because they themselves can't make money off of it. Not like they can, you know, all their other investment products. So I don't know why people take them seriously, to be honest. But
Okay.
that's okay. Anyways, all right. So the last thing I had here was from my friend. I said, okay, weird question. Do you have a plan for when you're going to sell? Like I sort of meant it as a certain price target, or if something happens in the world, or where you're actually going to sell it, or are you planning to hold forever? And he said, I'm planning to hold, look to buy more gold, more real assets. Given there seems to be no will by leaders to tell the truth to people about the path we are on, I am just trying to set my family up for success when it hits the fan. So, I mean, amen.
Excellent choice. But the reason that we have an insiders program, which is when somebody buys a certain quantity of gold or silver, they become an insider, is because one of the things that I'm trying to do, and you are one of the big factors in this because you're the guy that puts together all the data, but you and I are, I came up with a whole swath of overvaluation and undervaluation indicators for gold, and sort of gold sentiment and a bunch of other indicators. And by watching these indicators, I intend on converting tranches, probably like 10 or 20% of my current holdings at a time, so that you actually never run out. You can always cut a half in half and still end up with something. But converting it into other assets that I perceive as undervalued at the time. And by measuring these long-term cycles of overvaluation and undervaluation, anybody that says that they can catch the top is lying. If they caught the top back in 1980, they were just lucky. But I do think that with not letting fear and greed control my buying and selling habits, not letting emotion overrun logic and numbers, and then taking a clear look at history, and then tweaking the model to account for the fundamentals of what is going on today, how much currency creation is happening, and how severely overvalued some other asset classes are. Just adjusting for that, I think that we can catch around the peak. We can catch these sales and convert into other assets. And so that's been my plan all along. But so far, I've only been a buyer, not a seller.
Yeah. Yeah, because all those ratios like Dow Gold and so forth, they haven't even reverted anywhere close that you'd start thinking about selling yet. So,
right, they haven't reverted near to the mean, and then when you see the overshoot on the opposite end, where gold becomes overvalued, gold and silver, and the other asset being undervalued, we just don't see that anywhere. And so there's it seems like there's plenty of time left for accumulation, and that there's plenty of room for this to run compared to those other assets, because gold and silver should be buying a whole lot more than they do today.
definitely. So yeah, so last thing I wanted to end with is a little meme, but it's on the spirit of what my friend Matt said. Given that there seems to be no will by leaders to tell the truth to people about the path we are on, what do we do? And also, for anyone who forgot, Monday this week was tax day, and so hopefully you all filed your income taxes. The meme here is from Thomas Sowell. He said, elections should be held on April 16th, the day after we pay our income taxes. That is one of the few things that might discourage politicians from being big spenders.
I love Thomas Sowell. He is just so incredibly logical, and he's in his mid-90s now, I believe, and he's such a lucid thinker. He's one of the great thinkers of our time. He is my by far my favorite living economist. I think he's one of the greatest living economists. He is the greatest living economist, but he's one of the greatest economists of all time.
Yeah, I agree. I agree completely. So that's all I got, Mike. So thank you very much for being here with me today.
Okay, thank you, and thank everybody for watching. We'll see you next time.